The Johannesburg-based firm will separate into retail and business banking, investment banking and wealth and insurance. There's also been a management reshuffle and there's now a flatter structure.
And makes the group as a whole, I think we're going to see them able to be a lot more aggressive and nimble and as they want to change and adapt to circumstances.
The big focus now is on the continent.
Obviously a rest of Africa strategy at the same time, which at this point for now, Absa, relatively small, but I think rest of Africa will, as with the other banks in South Africa, start to become more significant as the years and decades move on.
Analysts say that the bank has been ultra cautious in its lending practices, possibly because the local operation was using its parent's balance sheet.
Of the big banks, Absa's certainly been the most cautious, and I think they can start setting their own requirements in their own lending spaces, and they've lost some market share and they can start reclaiming that back. And it's a fortuitous time because we're seeing interest rates coming down, we're seeing a bit of GDP growth.
Another area that may see a subtle change is the bank's dividend policy.
Their dividend was perhaps a little overly generous, and that's perhaps because the parent frankly needed some cash, so we might see a little bit of change there.
All these aspects make it an interesting investment proposition, analysts say.
My sense is that Barclays has been the cheaper. It's closed that gap to a degree, but I think with the new reviewed in terms of lending, in terms of the structure within of the banks, typically folks have liked Standard or FNB, but I think this frankly makes Absa an attractive investment in that space if you're looking for an individual bank.
Absa seems to have emerged from its Barclays ownership with a renewed vigour and a sense of purpose. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.